Hey everybody, welcome back. The ES is in a trading range. The SP 500 is just boxed in here, and we're not really doing a lot. We had this little move today where all of a sudden Putin reached out to Netanyahu, and all of a sudden we just thought it was going to be bad, and it was actually good, and then we rallied up. What's really interesting and what we need to be cognizant of here is we are in a news-driven cycle. People are not used to this, but expect a lot of just the ups and the downs all day long. Someone sneezes wrong, the market's going to move, and we're going to have to deal with it. At the end of the day, we thought we had a game plan. We thought that the bond market was going to be the reason that the market dropped. And guess what happened? We hardly dropped on the bond market news. So the bond market news, when the auctions went, it really didn't drop us that much. We thought we were going to drop a little bit more. We made down a couple points, but that was really it, guys. We just didn't really fall off a cliff here, did we? So now we have this range, and we're starting to see this range. Now, what does that mean for us? Well, you'll notice that we started with a smaller time frame than usual. We usually start bigger, and we're starting smaller tonight on purpose. So now we have a pretty clear flag. Now, if we take the levels and we just take the top of this control bar, which was how we broke down and we rejected here, and look at where we're at here, and we're rejecting that level again, it doesn't really get much clearer that we have to watch 4410. Now, if we take the top of that control bar and we draw this all the way across, we can see very clearly that 4410 is the level that we need to watch. Now, if we take this out and we make this a 4-hour, and we just drop this down, let's clean this all off. And let's drill into what happened here. And I think this is really important for us to kind of get a lay of the land and see what you're dealing with right here. So what do we have here on a 4-hour chart? Now people say, well, it's not this, it's not that. Look, I just look for patterns. They are what they are. If you don't like them, you don't like them. There's nothing I can do about it. But if I see them, I'm going to point them out, guys. So here's this pattern. And what that looks like to me is that looks like a cup and handle. Now, if you come straight across from where this cup formed, and we could say that it formed here, or we could say that it formed here from this control bar. We could say we just never really got to the top of that, and that's okay. Either way, so now we have this cup and handle. We know we have to watch this 4410 level. We know that above here to the top of here would be 44 or 45. We are constantly getting new data coming out on what's going on with the war, so we know we have to watch that. Now, I think this is really important. You have the 12 that is starting to point up. On Friday, the 13th, we touched the 12 and we bounced off of it. We then closed above the 22. This is constructive. So we're making a move, and this is what I would call as progressive. In other words, we're making progress. So what is the progress we're making? Well, the 12 was an issue. It's no longer an issue. We held and tested. Then we closed above the 22 for the first time since we broke it 2 days ago. And maybe we're pushing higher. This on the heels of a bad bond issuance, of a war going on, actually 2 wars, and tons of news that is constantly coming out. Put all that together, and I have a 55 that's declining. Even with that, if we take a look at the R, we will note that the RSI is pointing up, and it's actually a little higher or in line with where it was previously. We've talked about this before, but if you kind of come across, you can see that right there, how you're curved. And the important thing about that is, to me, and some people would say, well, that's a left shoulder, that's a head, that's a right shoulder, and here's your neckline. We could look at it that way. I would rather look at it the way I have it mapped out in my head, which this being the cup, that's all in this little level right here, and then this being the handle. That's kind of how I see it, and that's kind of where my head is with it. That doesn't mean that I'm rushing into things here. I'm pretty much like a cat on a hot tin roof right now. I mean, there are swing trades that I will just blow out as soon as I see the first crack, and that's because I don't know what kind of news is going to come out. We don't know how this escalates, if it escalates. And even when it escalates today, we really didn't move. You know, one of the things that I will say, I haven't seen this in 20 years. We have not had a, quote, war, like a war like this in the Middle East that could pull everybody in since Iraq. We have not had this. And we're not seeing the same players the same way. And Goldman had a piece on this, but let's talk about the NASDAQ, why I'm talking about this. So NQ back over the 50. Right here on the RSI, and we're back over the 55, and we're just crossing it like it's not a big deal, like it's nothing. And I use a 12, a 22, and a 55. And then when you look at your neckline here, well, we tried to break here, we didn't, tried to break here. The only thing that would get me about this is we are doing this. And this is something that we have to be aware of. We have to be cognizant of that. We are making lower highs, and we must be aware of that. But it to me, we made more progress towards the bull side today than the bear side. And I'm going to show you what I mean by that in a moment here. But if I'm looking at this, it does remind me a lot of '03, where we see a move down, and I'll show you what I mean by this. We don't need to spend a lot of time on the NASDAQ because we just did it on the S&P. So I do appreciate all the comments. I do appreciate you sharing all this. It's extremely helpful, but I'm just really trying to wrap my head around. I'm waiting for futures to open before I even recorded this. But I'm really trying to wrap my head around why we're not really falling down that much. Now you see Monday where you're at. It's not really that big of a deal. We can't even get anywhere. You can see your moves down, these knee-jerk reactions down, and we had them all day long. This is what would happen to us in '03, and then we would be waiting for the next shoe to drop. The next shoe never dropped. It just kept getting bought up over and over again, and you kept shorting, waiting for those shorts to work, and they never did. And we're starting to see something similar to that. Now, this can always accelerate. I have been saying that I don't think all the risk of this war is in the market. I can be wrong, and that could be the case. Now, I'll tell you why I'm starting to think that, not that it's all in, but that people just don't care because we're so washed out. The first thing that I'm going to point to is Apple today. Now, Apple had news that sales in China are down. And they're down 4.5% versus the last time that they had an iPhone launch. And that's not ideal that 4.5% is off. But let's look at this. Okay, so we got to the 55 and we rejected. We have the RSI and the RSI is rolling. But look at this bar. All we did was open and go higher. Now you bounced around all day, of course. But at the end of the day, you closed higher on bad news. When you have bearish news, bullish action, you have a change in sentiment. And it's not just here that we had it. And that's really a very important distinction. For example, FRO. Now we have Venezuela that is going to, all of a sudden, it's okay for us to deal with them for obvious reasons. But the tankers still went up. So even though risk was reduced to the tankers, because now oil is going to come from somewhere else, we're not going to be forced to pay these prices for the tankers, because now you can get oil from somewhere else. So that actually puts them at not a disadvantage, but it gets rid of their advantage. The stock still trades up. All right, so again, we have what could be construed as bearish news, but all right, so people would say, well, that's not going to happen right away. Okay, all right, so let's go to NVIDIA, and let's talk about the fact that the Biden administration is coming out with even more restrictions on what NVIDIA can do with China, even though South Korea can do whatever the heck they want, apparently. So we look at this and go, well, we touched the 55. Remember, I used a 12, a 22, and a 55, if you're wondering why your lines don't add up. Well, we got right to there, open there, and rejected. Right? We held, meaning we rejected the idea that we were going to break when I say reject. Now let's take this off for a moment, drop this in, and go back to the 1. All right, so let's look at this, and let's look at what happened. Hit it, bounced off it like a cat on a hot tin roof, and exploded to the upside. We had people in the room that actually trade right off those 55s. But look at that move on. Now, okay, so you say, oh, well, we're just going to gap fill. All right, so we gap fill, comes back down, and then what does it do? Flips the gap fill. And you could have used this bar and worked off of that for the day. So when you look at this, you've got negative news again, and we're blowing that off. So what's going to get us down? Is it going to be earnings? Is earnings going to drop us down? You can always comment on this, but are earnings going to drop us down? And for me, this is the kind of environment where even I've been doing this a long time, I don't wait. If something's going against me, I'm out. I'll just get back in, and I did that a couple times today. I did that with SMCI. I did not like the action, even though I got right to the 55 and held. I had a position I carried over. I did not like the news that came out with the ground war. I did not like the action. And sure enough, what's it do? It bounces. Now, I made money back at the end of the day, but this is the kind of thing that makes you look and go, well, we just have 2 wicks down here. Wicks of price rejection. That's right up to 55. Why in the world is that holding? And then you start looking and you broaden out. Now, if you watched Saturday's video, and I suggest that you watch Saturday's video, and I'll link at the back of those. Those videos are packed, guys. Each one of those videos takes me somewhere between 15 to 20 hours to put together. And it's all research. You can tell it's not done through the graphics. We have people that are creating graphics for us. And, they just donate them, and then I pop them in. But we had 3 indexes that were above the 55. Now we have 4. So now we have the Apple and Microsoft, which make 45% of this index. They're above the 55. So we're making more progress. We're actually getting better on the indexes. Now, is this a one-day thing? I have no way of knowing that. What I will say is that we're starting to see some really interesting developments, and I'll give you an example of what I mean by this. This was something that we traded today and did very well with, Lulu, and now we're seeing the S&P add these kinds of names to their list. Well, it's kind of an interesting time for them to do this, and we always hear the statement, well, they're always late to the party. Maybe they all are always late to the party, but in this case, they added Lulu while the stock was down, not while it was rallying, so it's an interesting time to do it. If we look at it here, this was something we literally did right off the open. It just made a lot of sense. I'm just going to show the timestamp right here from the room so you can actually see when we did it, and we used low a day. And that was pretty much the whole trade. And then we also shorted BNTX. So I'll get to that in a minute. But just important for me to show you that. And all we were doing was trying to get up and in and stay in the trade. Now, why is this important? Well, we measured it off with the risk. Why is this important? Why is this something we have to pay attention to? Well, this did not have to go up 10% today because it's getting added to the S&P. This went up 10% today because people are looking for something to buy. And this is what they bought. Now, you have had names that have been added to the S&P before, and they have not gone up 10% in a day. And we could say, oh, it's because they're short XLY. Well, we can what if all over ourselves. It doesn't matter. This is what happened today. So now we have NVIDIA that is up on the day after more sanctions and more problems with getting their product to China. Apple, lower Chinese sales, down 7 basis points on the day. When you start going through this, Schwab, which quite frankly, this was not the best quarter in the world, but I guess it wasn't as bad as people thought. This kind of bar where you encompass everything that happened right here, it was a decent quarter, but you missed revenues. So it was cost cutting that got you to where you needed to be. And look at the reversal. That's a reversal bar. I would watch this tomorrow. This is definitely something that's on my radar. But so we're seeing all this bad news come out. And to me, the majority of it was bad. And even when you saw the Visor news and Visor coming out and saying, oh, by the way, COVID sales are way, way off. It's way worse than anticipated. We're up 3.5% on the day. So you have all this bad news that's coming out. And why all this bad news is coming out, what's happening? These names with bad news are going higher. That is something you need to pay attention to. That is a change and a shift change. And this is something else you need to pay attention to. Look at General Dynamics and look at the action in General Dynamics. Look at the action in NOC and what's going on there. These are not small things, and they are things that we need to pay attention to. Now, for example, Tesla did not have to close back over its 55-day moving average, but here it is. It did close back over it. Let's take a look at Microsoft came down the other day, tested that 55, and then made a higher high. Well, the market's not really lighting the world on fire here, is it? If we take a look at the market, and we see what's happening, sure, we're over, but we didn't make a higher high on the NASDAQ, but Microsoft made a higher high. So we're starting to see a change in trend, or I should say it differently. We're seeing a change in sentiment. And what that means to me is that bad news is just being brushed off. So is that what we're going into? Is that what we're going to see going into earnings? Because we have a lot of earnings this week. Now, some of these regional banks you're going to want to watch. This is down 7% after hours. SFBS, they missed on the revenue front. You have this FBK, they're down about 2%. They missed on the revenue front. So you're starting to see these regional banks showing more cracks on the revenue front, and the earnings are probably through cost cutting. I haven't looked at either one of those yet. But they're the kinds of things that we're going to want to start paying attention to. Are we going to have a problem with regionals? If you take a look at the regional sector, it's not exactly lighting the world on fire, but it's not exactly falling out of bed either. And then we go into tomorrow morning. You have some big names tomorrow morning. So you have Bank of America that we have to pay attention to. We have Goldman that's coming out tomorrow. And this can go one of two ways, obviously. But you're really out of that little triangle right there, aren't you? So that's something we're going to want to watch. I always want to watch Johnson & Johnson and see how it acts. And then we roll right into tomorrow night. And you have a lot of names tomorrow night that people are going to want to watch. For me, the biggest one is just going to be to watch JB Hunt and go from there. But we're all aware of what's coming down the pike. We're fully aware that ASML is going to be like the first really big semi that comes out with earnings. And I don't know how we're going to expect this to be really good after what Taiwan Semi said, but this is where we're going to start. And then we just take a step back and look at the SOX. The SOX is still not over that 55. You're rejecting here on the RSI, but is that going to be the thing that takes us over the top? And we just don't know yet, because if you start looking at some of these other names like KLAC, you're above the 55, but let's go take a look at Lam Research. You are not able to get above the 55 today. Take a look at AMAT. Okay, you were not able to get above the 55. So which names are going to get there? Which names are not going to get there? That's what we have to pay attention to. Look at AMD. I thought that was fascinating. You closed right on it. Again, I use a 12, a 22, and a 55. That line's out of whack, isn't it? So when we start really drilling into this, we start seeing a change in trend. Is it a one day? Are we going to break tomorrow? Well, they made our life really very easy here. If you don't close over and you start making lower lows, we have our answer. What I find fascinating is with all the news that has come out, everything that has come out, including today on Apple, the fact that we just would close the way that we did is absolutely staggering. And really for me, even knowing that we're going to have more issues here with the embargo or sanctions or whatever they're calling it, this day of the week. And it just completely blew it off. I thought for sure if you were going to slice and then retest, this was the day to do it. And that's not what happened. And I think we just have to take into account that we are seeing the shift. Now, what I'm about to show you, a lot of people are going to say it's not the same. I'm not saying it's the same. I'm not saying it's anything similar. I'm saying that there are a lot of parallels to what I see going on. In 2000, we had this huge run up. And during this huge run up, the S&P, we're looking at a weekly chart, and right now you can see 2001, 2, 3, 4, 5, 6. I'm going to do this quickly, and then we're going to really do it again on Saturday. And if you like what I'm trying to point out here is we had a period of excess right in here, huge excess. It made COVID look like a joke with the amount of excess that we had in the market here. Okay, I mean, you thought you could throw a dart at a board during COVID. This was the same as long as it had .com after it. And we could see how we started to break down here. And then we could see that we had about 2 years of pain. After those 2 years of pain, right around here in March, so right in this area, we started to see some developments that were happening overseas, and we started to see some problems. And that's what all of this is, problems overseas. We know what happened on 9/11. We know where 9/11 is. And we could start seeing how this all started playing out. What got us out of this? You see this little down move right here, and then all of a sudden we're up. And then what happens for the next 3 years? We just take off. And I think that's a really important distinction. People will say it's not the same. I'm not saying it's the same. I'm saying it's very similar. You had a period of excess. You had a war which changed the way that oil moved. Oil went a lot higher during this period of time. And then for 3 years, we ripped until we hit another period of excess. And then we got zero interest rates. That's what happened. Now, if we take a look at what's going on right now, to say that we don't see certain parallels is just silly. If you start drilling into these little bars right here, you're going to see days where we just collapsed and it looked like we were going to break, like here, and then we just would not break. All we would do is rally. If you're interested in this, I can kind of get more into this during the week, but I prefer to do it on the weekend where we can really dive into it because the similarities are crazy. Here, I'll show you one more. Right now, the 10-year is at 4.711%. I know it's not the same. I'm not saying it's the same. I'm saying it's similar. Here we are in 2003, 4, and 5. Where was the 10-year? You're at the same exact level. You're at the same level you were 20 years ago, going through a very similar period in time. Hopefully it doesn't get anywhere near to what we went through there. But what happened during this period of time? Rates peaked, right? They all peaked in here. Then they started rolling when we thought they weren't going to roll. Right? And then what happened? Okay, we can start getting into the great financial crisis later. But what happened here? That's a really important distinction. And I'm spending a little time on this so you get it. I would look at the similarities to this and I would pay attention to it. Because the way that this is trading and the way that I am trading it is extremely similar to how I traded this particular period of time, with this 03, 04, 05 range. And it seems to be working so far. And I noticed that it is. Now it's only been a week. We'll have to see how it plays out. And it's not like you really lit the world on fire. You just started grinding higher and it became a stock picker's market. But it does give us signs that we do have a pattern here that we might want to pay attention to. That's it.